Hello and welcome to the Weekend Investing Daily Byte of 19th of November. And the markets opened with a bang up, gap up, went almost 300 plus points. And then Ukraine decided to send a missile to Russia, and Nifty came back and erased all the gains of the morning. So that was the story of the day. It was looking like a good bounce, a market where a closing above 2-day high may happen, which is a good probability of follow through, but that has gone smashed in the second half of the day. Anyhow, let's go forward and see what is in store. The topic for discussion today is shocking mistakes that you may still be making. Maybe you are a very mature audience and many of you may not be making this mistake, but a lot of folks in the market make these mistakes. So please stay tuned for the second half of this session to hear that one out. Please do read the disclaimer carefully. This is for your own good, and subscribe to the channel. Click on the bell notification and let's get into the video. So here you can see the last candle, Nifty going all the way up nearly 300 plus points to 23,780, and then losing almost 250 points in the last couple of hours to close slightly above yesterday's close. So we are still not out of danger zone, but yes, you can say that some support has appeared from this election day high, and now that level of election day high getting broken will be the next sign of a new down move. Otherwise, maybe we consolidate here and take another short. That is also possible. So 0.28% up on the Nifty. Nifty Junior also sort of a similar case where it had almost gone to 68,500, but then closed almost 800 points lower, 67,700 odd, net gain of 0.45%, not yet out of any danger. Still, the trend remains down, lower lows, lower highs, lower lows, lower highs. So that trend is down, and it will take some time for that pattern to play out, and then maybe some upward move to happen. So don't expect a U-turn or a V recovery from here. I think it will take some time, and consolidating within a range at a certain level is sort of the best case that we can hope for going forward. Nifty mid caps slightly better than others because this second half selling was probably largely FPI driven. So mid caps and small caps not that much impacted, still closing nearly at a 2-day high. So that's a good sign on mid caps, 0.94% up for the day. But again, this huge down move and this tepid up move so far does not give too much confidence for going on the higher side. Small caps also up 0.9%, still at the resistance level. It will need to break out of this band higher to even make a attempt. Two attempts have been made in the last couple of months. They have failed. So at some point, it will become a range and then a potential up move may start. 0.9% up there. Bank Nifty also went slightly higher to 5983 and lost 350 points from there, closed at 0.52%. These are small moves compared to these big moves that happened 4 days back. So it is not really overpowering in terms of change of trend as such. Momentum trends, declines of 172 versus advances of 323 in the first half. This was much more green, but the second half of session brought the bears back. FII selling in the previous session has been tepid at minus 1400 crores. DII is up at 2300 crores. So this is looking like uh, FIIs are not stepping up on the pedal at least. A week or 10 days back, they were at 4,000, 800 crores kind of sales. So the sales figure has come off, and that is always a good sign. Heat map quite red. Reliance leading the down move along with State Bank of India. Levers also down, L&T down, Bharti Airtel down, Maruti down, but very nice moves in HDFC Bank at plus 2%, Wipro and Tech Mahindra, Mahindra and Mahindra, Titan, Eicher, Sun Pharma, and Trent. These were the stocks that were going up. All life insurance stocks were down as government has opened 100% FDI in insurance sector. In the Nifty Next 50 space, you can see a good move in public sector bank enterprise stocks. So you have IRFC, PFC, REC, uh, some of them going up. Although HAL and IOC were down a bit, Bosch, Divi's Lab, Varun Beverages, NHPC, Lodha, these were also up. So mixed bag there. Adani Green losing 3%, and Zomato at flat at 0.21% on the listing of Swiggy, which was supposed to make some moves on Zomato stock. Uh, this was the different indices, how they have changed today. So you had media go up 2%, you have real estate go up 1%, autos up 1%, pharma 0.82. So not big moves, small moves, but decent moves in a couple of them. And then you have metals and PSU banks lose 1.03% and 0.83%. Others were sort of muted. Last 1 week's change is all red, and last 1 year is still red on my media, but last 1 year is still looking good for most of the sectors in this space. Real estate is gradually coming off, although there are some signs of green shoots every now and then, but this is not really, a phase where you will see sharp moves up. This is still consolidation, grinding gradually lower, although you had Prestige Estates, Godrej Properties, Lodha, Phoenix Mills all doing decently well today in the markets. Stock spotlight is on Kirloskar Brothers, up 8% today. Disclaimer that we have this in one of our portfolios. Stock is looking good, not too far from its all-time highs, and is making a cup and handle sort of a situation. And the stock is bucking the weakness in the market. Overall, on a longer basis, you can see a dramatic run it has had from 300 rupees start of last year to almost 22, 23, 2600 actually. And after taking a break, it is again making a move towards a new high. So it looks like it is likely to go much higher. So what is the mistake that we're talking about? Shocking mistakes that you may still be making. As per the AMFI website, the Association of Mutual Funds of India, there are 187 sectoral thematic funds as on October 31, 40% of total broad equity category funds. So almost 40% of the overall equity funds of that are there available, of them 187 are sectoral or thematic funds, and the net AUM is 4.52 trillion rupees. Uh, and which is more than 15% of net total AUM of all growth or equity oriented schemes. So a significant chunk of the overall equity mutual funds out there is now pushing towards the sectoral or thematic funds. You can see that AUMs in several of these different classes of funds has moved a lot in the last 1 year, especially in the sectoral funds. You can see 107% AUM growth has happened in the sectoral and thematic funds versus regular small cap, large cap, mid cap funds, where the change over the previous period is not as much, and most of this change actually has happened because of the growth of the units, whereas sectoral funds have seen a lot of new inflows in a very recent period, and hence this is not natural growth there that we are seeing. So Indian retail investors, a lot of them are not diversifying their bets, rather concentrating their bets. A lot of folks are moving towards sectoral or thematic funds, given the fact that some of these themes or some of these sectors have performed very well in the last 1 or 2 years. For example, defense uh, sector. So it is, market people will sell what sells the most. And right now, because you can show past performance in a great way in the last 1 or 2 years in several of these sectors, many of the AMCs, the asset management companies, have come out with sectoral funds which are targeting energy or defense or these kind of sectors where the recent moves have been phenomenal. And it is easier to go convince an investor that, see, last 2 years you've made 100%, so why not invest in this fund? And surprisingly, or maybe not surprisingly, if you already know this, many of these sector funds have higher costs, and they possibly also offer higher margins to the resellers or the distributors to push these products. So every time if a bank, wealth manager or somebody is approaching you for mutual funds, you would notice that they would go the sectoral way. At least, I mean, that has happened with me in my case. They have been trying to sell me sectoral funds, and that is, I think, the main reason is that they get better commissions on that, and it's an easier sell because the last few years have been great there. This is another schematic from ET, where it shows that there are several pockets where the AUM growth has been tepid, but several of them, for instance, energy. I mean, just look at this: 2000% is the AUM growth in the thematic energy total. Infrastructure is up again at 85%. You also have uh, 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 PSU and PSU banks and public sector enterprise stocks. Again, the AUM growth is 132% here. So many a times this recent performance is being used to sell this, and that is the reason why some of us will get lured into this. So the common mistake is that many investors will buy into sectoral funds, uh, not realizing that this may be a top of the move, or at least a significant move has already happened. Sectoral funds, by their very nature, will not be diversified across sectors. They will be focused on one sector, and that sectoral risk will get introduced if you are not diversified across many sectors in your investment approach. Uh, Many a times, a user may have several funds, but then they may liquidate some of them and get into a sectoral fund because they may feel that this can really catapult their investments forward. Sectoral funds are obviously more volatile than diversified funds, given the fact that they are focusing on one or some concentrated sector, and that is susceptible to changes in regulatory changes or technology advancements or economic shifts. These are the factors that can really, pull up or pull down several of these sectors. This is typically the case that you will see, like for instance, in IT index, nobody was creating new sectoral funds here, but once it has moved up 3 4x from where it was, here most of the funds will get launched and get sold. And then what happens is you'll get a phase like this, long phase like this, and some down move, before which you will start to make some money. So essentially the immediate sort of gains that were possible are have been squeezed out or juiced out already, and you are fed an instrument that is unlikely to perform in the short term. So again, you will see that PSU banks, for instance, have been flat for many years. And now suddenly in the last year and a half, PSU banks have gone up like 150, 170%. And you will see a lot of PSU sectoral funds coming out. They may go flat for the next many years. I'm not saying that if you stay with a diversified portfolio of sector funds, that is bad. That is also good. But most people will not have that diversification across sectors, and they will never know when to get out of that. So having a plan of your approach to the market, not getting stuck after every rally, into these lull phases, is the way to go. Have a proper strategy to approach the market with diversified, approach towards different sectors, different segments of the market. Also, don't get stuck just with large caps or just with small caps or just with mid caps. Have a bouquet of all market segments and all market sectors. So no angst against any theme or any fund, but the experience has been that retail does get hammered because of this belligerent selling by sellers, in terms of trying to convince people what to buy uh, after the significant gains have happened over the last few years. So be aware of that. What is your experience with sectoral themes in terms of uh, how they have been pushed to you? Of course, if you get into a sectoral theme at the right time, it will make you a lot of money because it is concentrated towards that sector. But it is very difficult to keep track of that unless you have a proper plan of approach towards that. So this is all I have for today's daily bite. I hope there is some new learning. If you think so, do share it with your friends and family or colleagues, and do like and share this video. Do subscribe to the video as well, and I'll see you in the next one. Thanks. Bye.